providing financial straight talk for those working and enjoying life after work. This is America's financial headquarters.
Investing world, as we all know, fear and greed drive a lot of the investment decision. And so one of the concerns when we see the market tail down is, where should I go? Is there a different place I should put some money?
And then you glob on all of the hype about the economy and a potential fiscal cliff and everything else, and then all the hypesters start coming out and the hucksters in terms of selling and pushing various investment concepts.
And we wanted to touch on discuss gold today. And ironically, I wanted to get into this discussion. I was talking with an HQ network advisor in Florida who had a potential client come in and sit down with him who had 100% of his money invested in some form of gold. And so we wanted to talk a little bit about
100% of the money. Boy, that's scary. Very scary.
And we wanted to talk a little bit about the different ways you can invest in gold. But before we do that, I wanted to introduce and let everybody know a while back, one of the regulatory bodies in the financial industry had put out an investor alert. And the basic premise to the investor alert was, in times like these, you have to watch the decisions that you're going to make because, as you kind of mentioned, the hucksters will start to come out. And so, you can't go anywhere without hearing about gold. I actually did.
So they put a gold investor alert out, is what you're saying. They're
Correct.
Telling people to beware of investing in gold.
Correct. I did a Google search on investing in gold, just those keywords, 123 million websites.
Wow.
So it's out there. But the investor alert basically says, watch for predictions of swift or exponential growth. It says to watch for claims that tie stock market performance to the general rise in gold prices. It kind of suggests that that's not exactly entirely true. It says to watch out for scare tactics as the threat of inflation or an economic meltdown might exist. Just watch out. Get your radar up for things like this. And Mike, the biggest thing is, and we always say, plan first, invest second. You must adhere to that. Here at America's Financial Headquarters, the thing that we really try to drive home is investigate before you invest. Do your homework. Make sure that it fits into your overall plan. And I wanted you to discuss a little bit about the different ways an investor can choose to invest in gold and some of the thought process behind that.
Yeah, we've been discussing gold as a potential investment. We've been talking about the risks of being overinvested in gold and not using gold properly. We've been talking about some of the hucksters, the different hype that you'll see about investing in gold and how dangerous some of that can be. And it's really a complex discussion, Mark, because there's a lot of moving parts in gold. A lot of people don't understand that. They don't realize what gold really is. Gold initially came out as a hedge. It didn't really come out as an investment itself. It came out more as a hedge against things like inflation and stock market and so on. In fact, one of the general statements that I've seen a few different places in terms of kind of like high quality gold discussions, if you will, they'll talk about the fact that, gold as a hedge, it's the way to look at it is if you can get an interest rate, whether it's a bank CD or whatever, and then you pull off the CPI, the Consumer Price Index, if that net number is now negative, then in theory, gold could hedge. Gold could be in a good position. Gold could go up in that circumstance. But if you do the same thing, if interest rates are higher, you pull off the CPI and the number is positive, probably not a good environment for gold. And then if you're going to go into gold, now you got to decide, what are you going to do? How are you going to invest in gold? You could be investing in gold bars. You could be investing in gold futures. You could be investing in gold stocks. You could be investing in a gold exchange traded fund. So all four of those different things come with a different set of dynamics, and yet the average investor says, I'm invested in gold.
But under no set of circumstances would you or we ever tell somebody to put 100% of their portfolio into gold.
Never. You should only have a small percentage in any given thing. And in this particular item, gold is a single entity at that point. So yes, it would be very dangerous.
Well, as we've discussed, fear and greed drive the investing equation so much. But I think the important part when you're considering any investment, especially with gold, is to consider the risk of being wrong. If you put all of your money in gold, what is the risk of you being wrong versus the risk of you being right or the reward for being right. And frankly, that risk is just not worth it in the grand scheme of things. If we looked at 2011 alone, I'm going to pull these numbers out, and I am cherry picking some numbers a little bit, but if we looked at GLD, which is the largest gold exchange traded fund, I looked at September, October, November, and December. Let me just rattle off some monthly returns for you. -11, +5, +1, -10. Now, this exchange traded fund has done fairly well over the time, but if you just looked at that segment of time, it shows you the volatility that exists with gold.
Yeah, it's really a non-event for the price of gold to swing 15% in the course of 12 months, or as you pointed out, even more so.